On that note, let's get in, the technical experts for the day. We have right at the top Manav Chopra of Indiabulls Ventures, who's joining us on the show. And we also have Ruchit Jain of Angel Broking joining us. Good afternoon to both of you, and thanks for taking the time out. Manav, let me start with you. Where do we go from here? Is this just a blip in an otherwise large-scale up move, or would you want to remain cautious at least in the near term?
See, at the current levels, the markets have already witnessed a short-term consolidation decline. You can say it more of corrective in nature, and we are witnessing a lot of consolidation in the market since last couple of days. Seeing the kind of a sharp rally that the markets have already witnessed, usually after such a time there is a phase of a time and a price correction. So I think the market is in that mode, and we also have important event which is also lined up for the markets going forward. So I sense at this current level you will see a lot of stock specific action. You may not see the throttle momentum in the markets, and eventually there will be very sectoral rotation going forward for the Bank Nifty, particularly 29,700 is the important support on the lower side, and as long as those levels are held, you will still maintain a positive bias and can expect a bounce back from the lower levels. For the Nifty, it will be 11,550 levels. So at the current juncture, after that short-term decline, I think both the indices are nearing to its important support levels, and this could be a good time whereby one can start taking bets only for a trading perspective.
Okay, Ruchit, good afternoon to you too. What is your view of the markets right now?
Yeah, hi, very good afternoon. Since last 1 week, we have seen the index has consolidated more of this in this range of 11,550 to 11,700 on the upside. Now we believe that this is just a consolidation within an uptrend. The high top high bottom structure that has been formed since the early month of since the first week of March is still continuing, and positional traders should use this time correction as an opportunity to again add longs whenever prices come near the lower end of this consolidation phase. If we look at the options activity, then tomorrow's expiry has the highest open interest built up in 11,700 call, which indicates that we may not see a breakout above 11,700 in next 1 or 2 trading till tomorrow. So I think probably we should see continuation of this consolidation phase, but positional traders, I think they are getting good opportunity in this consolidation to create fresh long positions when the market comes near this 11,550, 11,600 range. Amongst the sectoral indices, pharmaceutical sector has shown a signs of positive momentum after almost a sideways move of 3 weeks. The prices, in fact, the index has given a breakout above the higher end of this last 3 weeks of consolidation. So you may see some sector rotation wherein some names from the pharma or some private sector banks could show some outperformance.
All right. But what about stocks? Ruchit, let me come back to you on the ideas that you have for us today.
Also, a couple of names that we are positive on. One is Kotak Bank from the large cap space. After a sharp up move in the first half of March, we had seen a sideways momentum. This has led to formation of a bullish flag pattern. Technically, this is a bullish continuation pattern, and this entire consolidation phase of last 2-3 weeks, the 20 days exponential moving average has acted as a very strong support. So keeping a stop loss below this support, we advise going long on Kotak Bank with stop below 1320, expecting short-term target of 1425. And as we mentioned about the pharma space, so Divi's Lab within the pharma has been a good outperformer if we do some relative strength analysis with some other stocks within this space. So I think this Divi's Lab would show some good momentum in near term. So traders can look to go along with stop below 1675, expecting target around 1800 in near term.
Okay, and Manav, how about you? What stocks are you betting on today?
Yeah, my first buy call is on Cipla. The prices have actually seen a good corrective decline, and post that there is a breakout on the daily and the weekly charts. The breakout that has accompanied today, it has been with very sharp volumes, which it has witnessed in last couple of trading sessions. The prices are also closing above the short-term averages. And if you're looking on the structure point of view, Cipla, after a series of decline, is also forming a higher bottom. So I sense going forward, Cipla could definitely provide a very good resumption of the uptrend, and eventually we could see some much higher targets in the near term perspective. We recommend a buy into this with a stop of 540 on the lower side for an upside target of 570. My second call is buy on Escorts. The prices after a recent decline from its peak of 830 has seen a breakout on the daily charts, and the prices are also trading above its long-term averages. So we conclude saying that the recent decline was just corrective in nature, and eventually the prices are likely to resume. The oscillators are bouncing from its oversold level, so Escort indicates limited downside from the current zone. The stop loss for this stock can be placed at 760 on the lower side for an upside target of 825.
Okay. Well, that's the technical perspective. Just before we get into fundamental wise, just one stock on which we need to get a chart check going is Sterlite Technologies, 199 now, and has had a corrective move over the last few days. I think over the last few months, 6-month returns almost every single month has been negative. If we can pull up the SEAG function on the Bloomberg terminal for Sterlite Technologies and just show you what's happened over the last 6 months, it will show you the kind of pressure that the stock has been in. And that chart shows you November and December of 2018 and Jan, Feb, March and April of the current year. No, the column below or the row below rather. Those are essentially the 4 months and the 2 months preceding, which have done very well, which show how much pressure the stock has been in. Manav, just a quick thought here. In technical parlance, would you believe that a large portion of the damage is done already, or because of this recent stress, does it open up more downsides?
See, the prices actually, like you mentioned, it has been an underperformer in the markets recently, and it has already witnessed a series of decline. The only thing is that the recent advance in last couple of months, has been accompanied by good amount of volumes, and we are also seeing some fresh attraction, at least on the volume built up recently. I would just want to play this for a short-term momentum purpose, only if keeping an upside of another 10% from the current levels. But expecting the complete change in the structure is something that we'll have to still wait out and let the stock play out its own structure in the meantime. But I suggest one can only take a short-term perspective view in this, since the momentum is freshly building up, but the overall trend is still on the downside. So on the upside, one can only play it for 5 to 10% on the immediate basis.
Okay, before we get in a fundamental voice, there's just one more stock that I want to do a technical check on, and that's DLF, because things have certainly changed considerably for DLF, and it's actually bucking the trend. So while we do have a handful of these real estate companies which are doing well, DLF is really under pressure, and this is of course after we saw a very sharp drop about a few sessions ago. Ruchit, anything big that's changed in the trend for DLF? Would you go ahead and buy this particular company at these levels, or would you restrain caution?
So the stock is now trading near its crucial support levels of around 180, 181, which is the 200-day moving average. Now, if you look at some of the historical data, then this 200-day moving average, was crossed after a fairly long period of time in the second week of March. So ideally, I think tomorrow's trading session, maybe next 1 or 2 trading session would be more crucial for this stock. In near term, since the prices are trading near its support, I would wait for a breakout above 191, which is the immediate resistance. In case if we find the stock taking support at this 200-day moving average, and if 191 is taken out, then one can expect again a good positive momentum in the stock. But because since last 2 or 3 trading sessions, the momentum is quite negative, the volumes on the down move are also relatively high, I would wait for a breakout above 191 to take any fresh positions from a short-term perspective.
Okay, well, on that note, let's get in a fundamental voice. We have Gurmeet Chadda of Complete Circle Consultants joining us on the show right now. Good afternoon, Gurmeet, and thanks for taking the time out. Gurmeet, let me start off with the real estate sector itself, considering we are on that topic. We have seen a little bit of, up move. We've been talking to various experts in the industry, and we are still getting mixed, should I say, feedback with respect to an improvement in the real estate sector as a whole. Where do you stand? And if you do like the sector, what are the names that you find the most appealing here?
It's very interestingly poised, as you mentioned, because there are mixed responses, and you can't really. It's not a homogeneous sector, so you have to be very careful on what players you are investing in and what geographies you are targeting. I think Southwest one seems to be doing better. So top ideas there are Sova developers. I think what GST has also done is you will see more consolidation towards more organized players. The listed companies will gain. If you see, there are very fewer launches now. There's also a lot of discretion amongst lenders in terms of whom to lend, which again will benefit the listed ones because of the ratings and all. I like DLF with the fundraising they have done. They have been that shows a lot of commitment on part of the promoters. There is a pickup in the commercial real estate in the northern part and across other spaces. I've been speaking to a lot of fund houses and groups after the Embassy REIT launch, and a lot of you would see more prominent groups like even HDFC get into REITs kind of structures, which again will be structurally positive. So, but one has to get into this space with a 3-month, 4-month staggered view, and then extending the horizon to 2 to 3 years. I think the housing market will pick up over the medium term. Also, you must remember that it's a great employment generator. So you will see renewed efforts for revival of real estate and construction also on behalf of the government. And I see, I'm of the camp, which I've had various discussions also with Neeraj, is that there will be multiple rate cuts. So you will see transmission of rate cuts, and real estate being one of the interest rate sensitives to do well.
Gurmeet, actually just before I talk to you about equities at length, just a quick question on the development that's happened on the mutual fund front, right? The FMP plans on which Kotak AMC has written to investors that some of, it's not a full redemption of sorts, the money is slightly lower, so on and so forth. You know the issue. What happens next for people who have held that paper in the belief that the entire sum will come back?
So Neeraj, actually, each FMP has to be taken one by one. Of the one which recently matured, there were 2 papers of the Z promoter group. So you have 3 papers in these FMPs which are creating a concern. 2 papers of the Z promoter group, and one is the ILFS transportation paper, where there is already 100% provisioning done. On the Z group, I think my discussion with the fund house, and some of it is a little confidential, is that the money will come back. A large part of it will come back because the cover because there's an agreement till September. So if one is a little patient for next 3 to 4 months, the money will come back. The cover typically is 1.5 times the shares. So unless the share price collapses below 275, 280, I don't see much haircut there. ILFS is the one which will create, Neeraj, a bit of a hard one. But if you broadly take these FMPs in 2015 came when the yields were 9.25 to 9.5, maybe slightly better in direct plans. So there will be the realization over next 3 months. So you'll get some money now, and you'll get some money 3 to 4 months later. The overall yields would still, assuming nothing comes off ILFS, would still be above 8%. And if you add indexation, because these FMPs will have got 3 years, 3 months, 3 years, 6 months, the post-tax yield will also be above 7.25. So I think there's more hue and cry than what's while it's an event, because FMPs have never done this. In fact, one similar incident happened in 2008-9 when Fortis AMC at that point of time had a delayed payment. They were earlier FMPs were allowed to be redeemed in between also by paying a load. So they had put a cap where they paid money, few lakhs every week. But the entire thing again got settled in 3 to 4 months. So I would advise patience and caution. It's a large fund house. They have a huge debt book, and there is a collateral in place.
Okay. Let's talk about pressures in some of the other pockets as well. Gurmeet, I don't know how closely you look at Sterlite Technologies, but this recent pain that we see in that stock, what do you make of it? I mean, if everything was okay, then it would show on the screen, right? There would be buyers that would come in for a stock which arguably trades at 12, 13 times.
Correct. So Neeraj, I think the last quarter numbers were very good. I mean, if you recollect, there was almost a 60% jump. It's one of the better optical fiber makers. So purely on numbers and on valuations, which you rightly pointed out, it does look compelling to have a look at. But what I have learned in these kind of markets is that this is what we saw even with some of the other names like Z, when they used to report good numbers and then get hammered, for various reasons. Eventually, market is more right, and obviously it's probably seeing few more things coming. So maybe we can wait and let the stock settle down, but compelling at these valuations.
Okay, Gurmeet, we spoke about a sector which has been doing well. That's the real estate sector. But the other sector, which is in a little bit of a pickle, is the auto sector. In fact, I'm looking at the Nifty Auto Index, which is down around 6.5% currently. And the only saving grace in this particular index is the gains that we've seen in Tata Motors, which has actually gained as much as 25% on a year-to-date basis. But if we leave that aside, we've seen weakness in M&M, Hero MotoCorp, TVS Motor Company, Motherson Sumi, Eicher Motors. All of them are losing out more than 10% on a year-to-date basis. So, Gurmeet, the question is, one, if you were invested in the auto sector, would you remain invested? And two, would you go ahead and make fresh investments in the auto sector, especially given we have seen such a significant correction, or would you want to wait for a few months before you start initiating and allocating a little more in this particular sector?
So so two parts to this. So my sense is that if you you played out the FADA spokesperson on how March has been a little better. So I think I'm of the camp that maximum pessimism is usually a good time to accumulate some of the quality names. So if you talk about two-wheelers, you have three players who dominate the industry. You have Hero, which is virtually 50%, you have Bajaj, and then you have TVS, which is 90% of the industry. Now, if you see Bajaj from a low of 15% market share, they are already at 21% market share. There is cash in the balance sheet, and they're all three segments, which is exports, three-wheelers, and two-wheelers. They are showing volume growth. Although the margin is something which is debatable. So if you were to ask me, I will start probably accumulating Bajaj Auto for now. And I know it's very difficult to create this kind of a dealer distribution network for somebody else to come and replicate. So this is to me this is a transitionary phase. I have a lot of clients who run auto dealers. The number of inquiries are still okay. I think a lot of things came at one go, which were related to emission norms, tight financing, higher raw material costs. So over a 2-3 month, I'll start picking up two-wheelers for now because there is 70-80% is captive financing, so the credit would not be an issue. Election season, typically more money in rural areas is positive news for auto. Four-wheelers, I might just want to wait for a month. I would be a contrarian investor in Tata Motors early, simply because I think China business to me will turn around. And by the time the numbers come on the print, the stock prices probably would have run up. So Tata Motors in the passenger vehicles for me as a tactical bet, and Bajaj Auto on the fundamental side.
Okay. Stay on actually a couple of charts that I want to talk about since we are talking about autos, and if we can get those charts up on the screen now, and I'll ask our technical experts about those stocks. Since we are talking about Tata Motors, let's first show that chart. And now this was a chart that was used in the Hot Money show today. One of our experts recommended this as a buy as per the MACD indicators, saying that there's a positive crossover that has happened and this now stock has broken out above the trend line that was drawn in the last 1.25 years. Manav, the stock has already rallied quite a bit in the last 3 months, but there is apparently a breakout from those trend lines. Would you believe that too? And would your targets be higher than where they are right now?
See, if you're looking at this chart on a weekly to monthly basis, the structure is definitely the prices are bouncing from its deep oversold levels. And if you're talking about the risk-reward ratio on a larger time frame, definitely the risk-reward ratio is very favorable because on a high time frame, the stock still has a potential to even rally towards the levels of 265 to 280. Keeping that in mind, the prices and the momentum is building up on the shorter time frame. The volumes are also indicating a good move that will eventually unfold in weeks to come. Eventually taking a position at the current levels can also be initiated. The important support for this stock on the weekly basis is around 200. So 200 and 210 are the likely support zone. where the stocks would provide cushion in case of any decline. So this is the price level where one can look to initiate long positions. Also today on the daily charts, there is a fresh breakout above the 200 EMA with above average volume. So there is definitely a good hint on the structural changes. Eventually one should not be trading this on a very short term perspective, but any dips opportunity one should look to buy this for a medium term to long term perspective.
Okay, well, the other chart that we addressed in today's day of trade and today's show, Hot Money Show, was Motherson Sumi, again from the Auto Pack. The chart which is on your screen currently, it actually looks at drawdowns over, well, the last, I would say, 25 odd years. And as you can see, that every time there has been a drawdown of around 50 to 70%, there has been an up move. Of course, this largely involves a very large, it does involve a larger time frame, a longer time frame. So back in 2004, and that's repeated in 2008, we've seen a similar down move, a similar drawdown in 2011, very recently in 2016, and most recently a 52% decline from its peak for Motherson Sumi in around 2018. And from there, if we can actually flip this over and move on to the other chart and take a look at what the near-term perspective is here. Now, this shows you what's happened in 2019, and according to one of our experts, it suggests that it's looking at a little bit of a spring, and after which it did move and try to move towards levels of 165 odd. It's come and taken support just below the mark of around 148, 147. From here on, at least that particular expert is expecting a little bit of a breakout for Motherson Sumi from here on. Ruchit, what would you do with Motherson Sumi? What is your analysis of this one, and how would you trade it? What's the risk-reward ratio looking like when it comes to the near-term as well as the long-term view?
If I look at some of the historical data, then since the correction in Motherson Sumi started in the month of January 2018, when the prices were around 260, the stock formed this low top low bottom structure for the entire calendar year of 2018. In fact, till second week of February, the prices made a bottom around 127 in second week of February, then gave a bounce back move. But in that bounce back move, again the 200-day moving average, which has acted as a resistance in this entire downtrend, that was not taken out, and we have seen a price correction again. But what was different this time, that after this price correction in about first or second week of March, the prices for the first time after this 1 year of downtrend had made a higher bottom. So this is the first higher bottom which has been formed, but still we have not seen any formation of the higher top. So there is a probability that the stock is now done with the price wise correction that is behind us. So we may not see a significant from here on. But there is still time correction left in the stock. So if one is looking from about medium term perspective, now I think the prices would continue to consolidate in this range of 170 to 130, 140. So if one is looking from a medium term perspective, then I think this consolidation phase or time wise correction would be seen in Motherson Sumi. From a very short term trading perspective, I would like to trade the stock only on a breakout above 155, 156, which is the swing high. In case if that is taken out, then the 200 DMA resistance which we are talking about, which is around 170, that could be seen. So for traders, I would advise to buy this stock only above 156, that too not for any huge targets, but up to 170 could be seen, which would be the higher end of this consolidation phase.
Okay, fair enough. So that's your technical view on Motherson Sumi. But Gurmeet, if you can weigh in, take a look at the fundamentals. The company had set very lofty targets for FY20. At this point, at least some pockets in the media are indicating that management is not so confident about the revenue target of $18 billion, if I'm not mistaken. Where do you go from here when it comes to Motherson Sumi and as an investment from a fundamental standpoint? I know it has relatively better return ratios, but in terms of growth, it's simply not, it hasn't been up to the mark. So what are you doing with this one?
So, if you see, Nigel, the $18 billion target also had around $6 billion through acquisitions, and which is where the question mark comes on. So if you see as a player, it's the largest maker in the world in wiring harness. It started off in India in 1986 as a wiring harness supplier to Maruti and has really come a long way since then. It's also one of the largest player in the polymers space. It's the second largest in rear view mirrors. So my hypothesis here is that once the vehicle demand stabilizes, the biggest trend in this space is rising content per vehicle. And I think Motherson Sumi with the product range it also has a great track record of doing inorganic acquisitions and creating a lot of value and turning it around. If you go last 15-20 years, the prices look good. But I would wait for the overall auto industry to stabilize. A good buy at these levels, maybe one can accumulate 10-20% if you want to put 100 rupees today in Motherson Sumi, and then gradually get into it. The other one which I like, we have had a lot of discussions, is Minda, because there are a lot of regulatory things which will come in. So the airbags will become compulsory from mid of year. As I said, there is the demand for content per vehicle is typically 1.5x of the vehicle demand. So Motherson Sumi and Minda Industries both for me look very, very good long-term plays from a 3 to 5 year, but maybe gradually accumulate for next 2 months.
Okay, stay on, gentlemen. So much more to talk about. As we slip into a short break, here out Mahesh Nandurkar of CLSA, who decodes the investor sentiment on Indian equities and find out where he pegs the Nifty target for the near term.
What has happened over the last 3 months is two things. The global investor sentiment towards emerging market has improved significantly, and also the sentiment towards India has also improved significantly. So we did take cognizance of that, and we did change some portfolio allocations, and we did turn more optimistic on the markets about a month or a couple of months ago. But the thing is, we still believe that the valuations are in the higher territory. The market, the Nifty, still trades at about 18 times on a 1 year forward basis. Also, the data points from the from the bottom up basis at the broader economic level, or even from the individual companies level, doesn't appear to be all that great. So there's a bit of a mismatch between the investor sentiments and the bottom up economic data. But I guess what ultimately matters for the stock market performance in the near term is the investor sentiments. Those are clearly on the positive side, and we therefore expect the markets to continue to do well at least over the next few months.
Does it change your target on the index in any way?
Yes, so I would be looking at the index moving closer to sort of 12,000 or maybe a little bit beyond that over the next few months.
Okay. The other point being, now that we've got elections around the corner, a 21 global investor survey conducted suggested that it's not just about the result of the election now that matters, and whether or not the Modi government comes back into power with a majority or not. It's more about the focus and the agenda with regards to the economic pickup and the growth that needs to be focused on, bringing back jobs into the economy and a broader perspective as such. Would you say that all of what we've seen in the last 1 month is a precursor to the election results being baked in, and that could actually reverse if the results are not favorable?
Yes, I think the market is factoring in more stable government at this point in time. Clearly the market is factoring a higher probability of that. I wouldn't, however, say that it's fully baked in as yet, because it's never done till the time it's done, as we have seen many a time in the last sort of several election cycles that we've seen here in India, not just in India, elsewhere in the world as well. So I would say yes, now the market is building in maybe like a 70, 75%, 80% chances of a stable government, but not fully baked in as yet. But having said that, I would also say that the market rally that we've seen here in India is not attributable only to what's been happening within India or the political sentiments, etc. But a large part of the rally is also associated with what's been happening globally. I mean, you look at the Asian indices, or even the global the MSCI World Index. All of these indices have done very well over the last 4-5 months, up between 10% to 15%. So India is not the only market. So I would say a large part of the rally that we've seen is more due to the improvement in the sentiments of the global investors, due to global factors, like now we are building in a probability of a possibility of a rate cut. In the US, we're also sort of talking about the European Bank, ECB also going very slow. We are also looking at a possibility of a resolution between the trade conflict between the US and China. So there are a variety of global factors which have also turned favorable. And yes, the improvement in the political sentiments here in India has also added to that.
Back with countdown right here on Bloomberg Quint. Less than 25 minutes left for the markets to shut shop, and we are down 1% for the Sensex, nearly 1% for the Sensex and the Nifty Bank. So 300 odd points down for the Nifty Bank as well, 85 points for the Nifty. We've gone down and we've stayed low. That's the key thing. HDFC Bank, the big culprit, but must say IT is following suit with TCS and HCL Tech looking slightly wobbly. Bharti Airtel now is the top loser on the index. The broader end of the spectrum punctuated by a lot of losers, and we'll talk about them with Yash in just moments from now. But keep in mind, from a Lakshmi Vilas Bank to a Century Ply to a Sterlite Tech, all of those stocks under pressure. Just a quick check on what the world markets are doing before we get in the Fab 4 stocks of the day and show you what Europe is up to and what the US futures would be up to. Yesterday was a down day for S&P and the Dow. Right now, flattish to maybe a mixed bag for the European indices and the Dow futures, which corrected marginally yesterday. Let's see what they're doing today in the green. So we have our own problems to grapple with, I would reckon. 300 points for the Nifty Bank. Let's try and find out if there are Fab 4 stocks in a scenario like this and find out what's made it to Yash's list. Yash, good afternoon. What's made it to your list?
Good afternoon, Neeraj. So firstly, there is Wipro in the Fab 4 list, and that is on the back of the piece of news in Times of India, which says that the company has actually received market regulator SEBI's approval for its buyback. Now, the company is set to announce a huge $1.8 billion buyback, which is close to about 12,000 crore rupees, with the share price fixed at about premium of 12% to its previous market price, so watch out for that. Praj Industries at one point surged more than 8%, and this is on the back of the news that the company has in fact entered into an agreement with US-based Gevo for the manufacturing and promotion of non-renewable products. Greaves Cotton is up 2.5% after the company after media reports suggest that the company will foray into the EV space and is likely to roll out its e-scooters sometime this month. Lastly, watch out for Rain Industries. It has been moving significantly higher over the last few trading sessions, up 5% today as well, with volumes coming in significantly higher, more than 3 times its 20-day average. Back to you.
Yes, thank you so much for bringing us those Fab 4 stocks of the day. Of course, to talk about Praj Industries specifically, it's advancing today after 7 straight days of losses. So perhaps this is a positive development for the company. Essentially, it's opened with gains of around 6%. It's been largely hanging, say for a very sharp spike in the last half an hour or so of trade. But we've seen crude rise too, and I'm sure there are a lot of sectors out there which move on account of crude. It's currently at around $71 to a barrel and at a many-month high. But what do you do with OMCs in such a circumstance? Let me just take this question up with Gurmeet. Gurmeet, what would you do with something like an IOC, BPCL, or for that matter, if you talk about the other end of the spectrum, something like a Reliance Industry, for that matter, how would you approach these stocks now, given crude is where it is right now?
So I think you have to be a little tactical here. Usually what we have seen is that whenever so if you see last quarter for OMCs, the average price for the quarter for crude, and I'm talking more from an inventory gain or loss perspective, was about $64, and you had a falling crude. This quarter, the average price is about $66, $67 with a rising crude, which means that instead of inventory loss, either it will be flat or you could have a marginal gain. Also, if you see the gross marketing margins, they've been about 5.5 rupees to a liter. The only concern obviously has been the Singapore benchmark in terms of gross refining margins, which is around $3, with slight pickup towards the end of the quarter. So my sense is that the quarterly numbers which will come by may not be bad, and you have to look these companies more tactically. So you might want to get into them with a good price correction. Obviously, you will not. I mean, HPCL below 200 or some of the other names which came down probably will not get them at that prices. But if there is a sharp fall and crude stabilizes, you might enter before quarterly results and then probably make a trading view on it. But you can't take a long fundamental view on these stocks till the time the crude prices remain where they are.
Okay. Some queries on our platforms for both our technical and fundamental experts. A couple of fundamental queries first, and I can imagine one of the stocks on which a lot of retail investors had parked themselves in, finding some queries. That's Bhansali Engineering and Polymers, or BPL. Not surprised that there is a query being asked on that one. Gurmeet, any thoughts here?
Neeraj, I don't track this stock, so won't be able to.
Yeah, I think the stock did very well until recently, but the last 2 quarters, it's gone off the boil completely. There is also a fundamental view request on Eicher Motors. Now, Gurmeet, whether Eicher Motors is a good stock to buy, or vis-a-vis Eicher, I mean, instead of Eicher, would you put that money, whatever the amount is, into some other stock?
So, Neeraj, I think it's getting to a level where probably on a valuation basis, you're getting a little comfortable. The ex Ashok Leyland CEO joining them is probably some good news. With Siddharth Lal being concentrating only more as a promoter. So purely from and I know the guy carries a lot of great credibility and credentials. Also, I think they're while we keep discussing on the Enfield bit, what we won't probably discuss is the JV with Volvo, which to be at the mid end, I think there is some pickup likely this year. So Eicher, maybe post results one can start accumulating. My sense is that, as I said, the Royal Enfield brand cannot be written off. The new launches of the 650cc variants have been pretty decent. There's a lot of work happening in exports and overseas markets. So may not be a bad price point for Eicher Motors, but I would like to wait for one more bad news to come in to get into a better entry point. So hold on for now.
Okay, hold on for the time being is the call that is likely. That is from Gurmeet on Eicher Motors, 20975. What's not done well though, and now trading in the lowest point of the day, is Bharti Airtel. So before we talk to Yatin about what dealing rooms are saying, a quick technical perspective out here. Manav, Bharti Airtel, the top loser now, 338 and counting.
See, actually, if you're looking at the structure of Bharti Airtel on a high time frame, it looks very impressive. I sense that there is a good medium-term bottom in making for this stock, and it has been trying to consolidate at the lower levels, finding its support around the zone of 330 or 330, 320 on the downside, and there are a lot of divergence pattern on the momentum indicators are also hinting for a near-term bottom in place. So I would want to take a contra bet into Bharti Airtel in case if the short-term declines manages to hold around the support of 320, 330. I think that would be a good time to initiate long positions, because from there on, maximum downside that I see into the stock is not more than 5%. And whereas looking at the overall structural move, since the prices have declined on a larger time scale from 500 levels, will not be surprised to see in case if these support levels hold, the stock can again come back to the levels of 380 to 400. So I would want to take a contra bet on the low levels for Bharti Airtel.
Okay, a little over a quarter of an hour left for the markets to close, so it wouldn't be a bad time to get in a dealing room check of what the dealing rooms are telling their clients. And on that note, I'm going to get in Yatin Mota to give us that channel check. Yatin, good afternoon.
Nagam, and in the morning also we're talking about certain auto ancillaries and how earnings could be Battery stocks are quite active in trade today. We have both Exide as well as Amara Raja batteries, which are quite active in trade. 0.5 to 1% up for all of them, as dealers indicate that domestic funds are buyers in trade as far as all of these auto ancillaries are concerned. Also, Havells is one stock. Today, Nomura came out with the report saying that the valuations are probably stretched. Dealers do indicate STBT kind of strategy, which is basically sell today, buy tomorrow. And finally, Marico is one of the FMCG stocks wherein dealers do indicate that buying is happening in select FMCG stroke defensive stocks given the weak market conditions. So a lot of money flowing into these FMCG names. So watch out for Marico. Dealers expect the momentum to continue here on the positive side.
Okay, we'll watch out for this one as well. Some developments on the positive side maybe is what dealers are telling Yatin Mota. Couple of days before earnings, and we'll talk about IT extensively tomorrow and day after, I'm sure. But Gurmeet, we may not have you tomorrow and day after, so talking to you today, what do you expect the big boys to do, TCS and Infosys?
Neeraj, I think it would be a steady quarter. I'm probably more optimistic on Infosys, defending their margins between that 20-24% band. Also, I think the deal win momentum is pretty solid. Whatever little conversations I've been having across my clients and people who work in IT is that it could be for Infosys, it could be in that 1 to 2 billion kind of a range. The BFSI vertical continues to do well with now, most central banks getting into the easing mode. Sooner or later, it may not be very bad news for the IT majors. The currency would be a bit of a thing to watch out for because a percentage appreciation in rupee typically has a 20-30 basis impact. So I think it would be steady. It may not be disappointing. It may not be how the results have been coming out. IT has been one of the best performing sectoral index for the last 12 months. So I think it will be steady. And top picks for me would be Infi and Tech Mahindra.
Okay, Gurmeet, if I can just, do a follow-up there. In Infosys specifically, the last 2 quarters, we've seen margins contract. And I'm not just talking about the Panaya, step down that they've taken. If I keep that aside, what has also been typical of the entire sector as a whole is that a lot of these managements have said that they're facing a talent crunch, which is why they're seeing that operating expenses will come off to a certain extent. Their margins are coming off too. And I read at least 2 reports where the suggestion is that there could be a small chance that Infosys could project lower margins for the upcoming financial year. How are you reading into these factors when it comes to operating margins specifically, maybe for Infosys, perhaps for the entire sector when it comes to the talent crunch they're facing?
So I think that's a very good point you've made, and also if you club this crunch with the visa rejection rates, those are at an all-time high. So they're the expenses both on-site, off-site seems to be going up. A, because of talent crunch. Second, because of the visa rejections. And then there is a currency headwind, which used to be a tailwind till a few quarters back. So there will be some concerns there, but my sense is that there's also a lot of cost-cutting initiatives they are undertaking. So my view is they'll be able to probably retain the margin maybe at the lower end and not at the higher end. And the deal win momentum might slightly compensate for a small, erosion in margins. Also, the share of the digital business, if you see quarter on quarter, which is a higher margin business, is picking up. So that could also be a bit of a offset. But you're right, some of the concerns are valid, and I'll not be surprised if there is a small revision.
The point about the digital revenues, of course, is also, it does make a lot of sense because that is the portion which is providing higher margins. But from that on, I'm going to address another real estate sector, and I want to take a technical check here because I want to talk about Oberoi Realty for just a bit here. Well, of course, while the real estate sector or the realty index has advanced by around 19-20% odd, Oberoi Realty has actually seen an outperformance on a year-to-date basis, and it's not the top performing company in this particular sector, but Oberoi Realty certainly has picked up steam over the last few days. So Richard, let me come to you on Oberoi Realty. What are you picking up on this one, and what are the technicals telling you?
This stock gave a breakout out of the consolidation phase in the mid of February, and the breakout was supported by very high volumes. Post that, last 1.5 months, we have continuously seen a high top, high bottom structure getting formed. And even if you compare the volumes during this up move, the up moves have been supported by very good volumes. So there are signs that this uptrend is likely to continue. The initial targets would be the earlier April 2018 highs, which were around 600, 610 kind of range. So I think from here on, we should see 600 kind of levels in very near term. And if the prices hold to give a move above that previous highs as well, then I think this standard phase is likely to continue towards the next retracement targets, which would come somewhere around 700 as well. That would be a bit from a medium term perspective, but at least from a short term perspective, I think we should see levels around 600 very soon.
Watch out for those. By the way, the markets have now are trading at the lowest point of the day. The Nifty Bank 1.08321 points lower, the Sensex 365 points lower, so it's looking very wobbly. The stock that's really borne the brunt of some selling the last few days is Asian Paints. Yesterday's session, the CLSA downgrade down about 3%, today's session 2.5%. Now it's reached the target price that they'd mentioned in the report. The other one that is correcting today again on a downgrade is Century Ply, down about 4% after CLSA went down and cut the target price. So on Asian Paints, of course, remember, it was a double downgrade. Closing strategies from our experts, and then we'll get views on these consumption names too. But Manav, your top closing strategy today?
See, at the current level, I'd like to go with Pidilite. The stock has been in a very good uptrend. In fact, it has been forming a series of high tops and bottoms, and the prices have also taken support near its short-term averages. And looking at the markets, I think this could be a good defensive bet. The stock has an important support at 1260 on the lower side, which can be a stop loss for an upside target of 300 for an upside target of 1315.
Okay, Richard, the same question to you. Your closing ideas for this afternoon?
So we have seen that markets are in the consolidation phase in the range of 11,550 to 11,700. Now we are closing near the support end of the range, so I think it does not. I think it makes sense to create some long positions over here, considering that we are very close to the support. Siemens among the stock specific names has been showing an outperformance in spite of Nifty being down by around 90-100 points. We have seen that the stock is holding up near its day's high. I think looking at this outperformance and the short-term trend, which is also positive, I would recommend doing a BTST trade in Siemens at current levels with stop below 1145, expecting target somewhere around 1200 in tomorrow's session.
Okay. Now Asian Paints, right, at 1400. Gurmeet, promising story, valuations rich even after this correction. Would you use this to add Asian Paints, or would you believe that there will be better times available?
So adding it, Neeraj, I think this is one stock which is in my category is buy and forget, along with HDFC Bank. So any dips are welcome if you have a 5-10 year view. And we have discussed this, there's a structural story. There is a consumer uptrading which is happening, which we have discussed. The joint families are becoming nuclear families. There's a conversion happening from lime to branded paints. And I think Asian Paint caters, if you see it's a 40,000 crore industry, or its share is about 60%, which is about 2.5 times the nearest competitor. And, they're also trying to transition into a complete home solutions provider. And they have brands across the price points. You have the Utsav and the other, which are the lower price points one, and then you have the Royale. There's a lot of new product launches they have done, some price hikes they have done, and also on margins. I think both crude and the titanium dioxide, which is the key material here, from a base of what it is may not really hurt the margins too much. This hike in crude is more April specific and not last quarter. So unless crude really shoots up to $80-$85, I really don't see any issues there. One should be a buyer on dips for Asian Paints.
Okay, and Gurmeet, just quick thoughts on Century Ply. That's the other one that has seen a downgrade today. Any thoughts here?
So Neeraj, I would probably like to watch out for the quarterly numbers they come in. If you see the overall business, I think it has benefited the sector as a whole, because it's a huge unorganized space in which they operate in with the local players. A lot of my relatives are into timber and other stuff. So the overall outlook seems to be quite, flattish, especially in the northern part. I would say there are better home improvement themes if you want to play. Than Century. You could look at CVC pipes as a segment. There the volumes are going thick and fast. Fast moving electrical goods, again part of the home improvement segment. That again to me is a secular story. The summers has just started, so that should be good. So there are better plays in the home improvements theme than a plywood right now. Even sanitary ware makers. So you play those themes better right now rather than get into Century for now.
Okay, Gurmeet, fair enough. Thank you for joining us and taking us through your views in the markets and some very valid points made out there by Gurmeet too. We just have about 5 minutes left, so I'm going to take some final thoughts from our technical experts as well. Manav, coming back to you, it looks like the Nifty is likely to close around 11,583. Well, below 11,600. So I reckon your view stands when it comes to what you had said earlier in the show about an hour ago?
Yes, it's the same. I did mention that, the markets are likely to consolidate, and on the lower side, 11,550 is the support. So, as long as those supports hold this, and, I don't see much of a downside from these current levels. So it's again a good time, this opportunity of markets where we can go and take some short-term bets on the upside. But even though 550 breaks, I think the next support comes at 11,500. So there are a series of supports on the immediate basis, and on the near term, I sense we could see some sort of a consolidation in the market, and maintain stock-specific view could be the right strategy going forward.
Ruchit, so based on what's happened today, actually the last 3 days wherein we've been a bit of a yo-yo, what's your prediction of what will happen in the near term, tomorrow or for the rest of the week?
Chandra, I don't think one should worry much because of this today's 80-90 point correction that we have seen. I think, if we look at some of the options data, then, for this weekly expiry, which is scheduled tomorrow, 11,500, 11,700, options have seen good writing. So this is probably a consolidation phase, which should continue for tomorrow's trading session as well. But from a near-term perspective, use this decline as a buying opportunity, because the broader trend for the market is still positive, and 11,550, technically is a good support for the markets. So I think if one is looking from a positional perspective, then this decline should be bought into.
Okay. Manav, quick 30 seconds, same question to you.
Yes, looking forward, I think, like I mentioned, 11,550 is the support, but most importantly, looking at the Bank Nifty also, we've seen a good amount of corrective decline in Bank Nifty of around 600, 700 points. So, given a choice, I think looking at the PSU banks, since it is already declined, I think one can also start taking selective bets in PSU banks. If I have to choose one from the PSU, I think SBI has already declined from its peak of 340. So, 300 is an important support. If that holds, you can still expect some sort of a recovery coming from the lower levels.
Gentlemen, Ruchit as well as Manav, thank you so much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. Let's start wrapping up the markets for our viewers. About 0.75% in the red for the Nifty, about 1% lower for the Sensex and the Nifty Bank.